Hey guys, so the market's still in a free fall. The Nasdaq is down 32% this year. The S&P 500 has just hit a bear market, is now down 22%. Cryptocurrency is down over 65% from its peak. Real estate is slowing down and is likely to fall soon, and the pending recession is near. So I want to help you navigate through the troubling times we're in, since losing money is a large part of investing. And I want to establish that the times we're currently in are normal. Investing isn't always easy, and sometimes you need to be realistic about the things you put your money into. Hey, my name is Han, and I want to journey to educate millions of people just like you on personal finance. This video will cover historically how markets have performed and give some clarity on the emotions you should feel during a bear market. And of course, as always, this video does not equate to financial advice at all, but without further ado, let's get into it. Let's start with stocks, and what we know is that they're down a lot. This is because of the fears around rate hikes over the coming months. CPI data reading inflation at 8.6%, the highest in 40 years since December 1981. Supply chain issues, company layoffs, the ongoing battle in Ukraine, along with many other factors that are heavily pushing the market downwards. However, here are some facts I think you should know. Since 1926, or the last 96 years, which I'm going to coin as the Queen data, since she was born April 21st, 1926. Anyway. Since then, we've seen the market drop 15 times of over 20%, which is known as a bear market. Now this is crazy because since the start of a bear market, which we're currently in, it takes 369 days to reach the bottom. Nice. And when the market reaches the bottom, on average, it falls 34.8%. So now that's currently down 22%, we can assume there's going to be a lot more pain ahead. Now in order to recover from these losses, on average it took 794 days to reclaim the original price. Now obviously the market has caused people to lose a lot of money. Although if we look at how much the market has gone up just 5 years after it started the bear market, on average stocks returned 69.9%. Nice. So the lesson we learned from all of this is if you hold your bags and stay invested in the market, you're always better off. Now let's say at the start of 2008, you invested $10,000 into an S&P 500 index fund. That year the stock market was down 37% and you'd be left with just $6,300, which would be extremely demoralizing, especially if you're a young, inexperienced investor like myself. However, the next year it increased by 26% and your investment would be worth $7,940, which of course is still lower than your starting point. Now 2010 comes around with an incredible 15% increase, which is still above the market average of 8 to 10%. But still, your investment is only worth $9,130. 2011 is again disappointing with just 2% gain. Now it's on until 2012 when the market goes up a whopping 16%, where it amasses $10,800 and reclaims that original investment. So that takes 5 years just to break even again and requires an incredible amount of patience to be down for so long. But luckily these level-headed investors are rewarded with a 159% return to this day, which is worth $25,900 even after the massive fall recently. And at the top of the market back in December 2021, it would have been worth $33,300. So the lesson learned here is even if you buy at the height of the market and it falls in one of the worst financial crises in all of history, if you just demonstrate patience, you can gather an unbelievable return. And I'm just going to pull up a graphic that shows how short bear markets last over essentially a lifetime in comparison to the bull markets. And a quick fact, over that graphic span since 1926, the market has returned a cumulative 884,084%. So just an investment of $1,000 back there would have been worth over $8.8 million today. Crazy. Now in terms of cryptocurrency, are we surprised? The bear market between 2013 and 2014 saw cryptocurrency fall 78%. The crash during 2018 saw the market cap fall 86%. And so far this collapse from all-time highs has dropped 68%. So yet again, by looking at history, we can assume that there is a long way before we hit the bottom. Nonetheless, if you're still interested in how blockchain will be integrated into the future, you shouldn't feel obligated to sell out and instead just continue staking and earn interest on your crypto. Although I can still give you some insight on when we may hit a bottom according to history yet again. Now Bitcoin has never seen a true recession and likely will soon as the world economy continues. So this is a financial climate that this asset class has never really seen. Yet if we look at past bear markets in the space for Bitcoin, the first drop took 406 days to reach a bottom, whilst the second took 362. With limited data, unlike the stock market, it's hard to gather a prediction, although we can assume that it takes just over a year for Bitcoin to reach a bottom. So we can approximate that the bottom will be between November or December at the end of this year. So as time plays out, if we see a flip in the market worldwide, we can make a reasonable prediction if we're near the bottom and can decide to buy the dip more heavily if necessary. Now another fear in the crypto market is the possibility of Michael Saylor's company MicroStrategy being margin called on some Bitcoin-backed loans. Back in March, they gathered a loan worth $205 million and there were fears that they would have to cover this loan with their already $4 billion worth of Bitcoin on the balance sheet. The issue is that their chief financial officer stated in May that if Bitcoin were to go below $21,000 US, that it may trigger a margin call on borrowed money. So with such a large sum of Bitcoin on the balance sheet, news of a margin call would likely send the price of Bitcoin spiraling even further downwards. The Federal Reserve just hiked rates by 75 basis points in the largest gain since 1994, in the aim to bring down the highest inflation that we've seen in over 40 years. The Federal Reserve still has 4 meetings before the end of the year, meaning we could see a 3.5 to 4% federal funds rate before the end of the year, which was put us around the same rate we saw in 2008 just before the Great Recession. And it's highly likely we're forced in a recession just to bring down these insane inflation numbers. It's crazy though that a 75-point basis hike wasn't even seen a couple months ago, and investors were just scared of even just a 50-point basis hike. Hence describing how confusing the market we're currently in is. Next up, we need to tackle the concerns around housing. And this comes just after mortgage rates have spiked to almost 6%, leading to less demand than in the recent past as well as an increase in inventory. Since housing lags with the current market, we won't see the effects of right now for another 2 to 3 months. However, we can assume that overvalued areas will likely crash 5 to 10% at least. However, real estate is really dependent on where you live, and you may need to research this individually. Although purchasing homes to increase cash flow will be really beneficial for right now because it's unlikely we see the same rapid growth we've seen for housing in the last couple of years. Nonetheless, the best strategy to invest during any economic times is to continue dollar cost averaging into the market and then invest in asset classes that you yourself understand. Nothing beats time in the market rather than time in the market. Although don't be scared of your portfolio sinking rapidly because recessions have shown to be the best opportunities to generate generational wealth. It's not a terrible idea if you have cash on hand to increase your daily, weekly, monthly investments to a larger sum if you see the companies you love at a discounted price. With that said, guys, thanks for tuning in to my concerns about the current financial climate and how people should control their emotions as everyone is panicking as the market goes down. Click on my last video, I will describe the benefits of Bitcoin and cryptocurrency in the financial system, as it was so much fun to record. And don't forget to like and subscribe because I'm trying to get my message out to as many people as possible, and you supporting the channel will help contribute to that mission. Below my socials, but anyway guys, heading out.